Now we're going to do the last part of the income statement. Alright, so we've done the net sales minus the cost of sales, which gives us gross profit, which we've done. And now we're going to start with the gross profit in the profit and loss account, and we're going to add all the income and we're going to minus all the expenses to either get a loss or a profit. Okay, so as we normally know, profits normally have an opening balance or balance on the credit side. So that's the 140,000, which is the gross profit. The gross profiting figure from the trading account. So profit and loss is credited, and this comes, as we said, from the trading account. And the trading account, that was the balancing figure of 140, which we worked out there, the gross profit. So we bring the gross profit over, right? We add all the income, which is in this case only the discount received of 2,000 rand. And then we minus all our expenses, rent expense, salaries, sundry expenses, depreciation, and so forth. Okay, now if the expenses are more than the income, we're going to get a loss. So that loss is 75,000 rand. So you will see from our income statement, which I showed earlier, there is the 140,000 plus the 2 minus the 217,000 expenses gives me a net loss of 75,000 rand. And that net loss I'm going to take to the appropriation account. Okay, so again, I'm going to take it to the debit side of the appropriation account, because on the debit side it's like a loss. Appropriation account had a credit balance, it would have been the profit that would have been taken over from this side. If there was a balancing figure on this side, would have taken to the credit side of appropriation account to distribute. Okay, so that is the net loss, that's the balancing figure to get both sides equal to 217,000. Now the last thing I want to show you is what's happening here. Okay, so that 21,000, 3,100, etc. So that was in the pre-adjustment trial balance, that was the opening balance. And as we all know, we've done adjustments. So there was too little expenses, so we had to add another 1,000 rand rent expense. There was too much rent, salaries and wages, so we had to credit salaries and wages and minus it to get to the 158. Sundry expenses, too much sundry expenses, so we minus the 500, so the final figure was 25,500. Depreciation, the same thing, started with 5,500 in the year to get to 6,000, and these ones we just took from the pre-adjustment trial balance. So that is where we do all the adjustments in the profit and loss account. We show it here. Right, when you're doing a profit and loss account and they only give you the profit and loss account, or they give you a profit and loss account as a T account, and they don't show you, you don't have a post adjustment trial balance, you can do it directly within the profit and loss account. I want to make this clear. If you don't have a post adjustment trial balance to show this 21 plus the 1, then you must physically, or a balance sheet, then you must physically show it in the profit and loss account. Okay, so that was the working out the net profit or loss.